Mike, this is the first podcast that I recorded on the road. Uh, so we'll see how the audio quality comes out. I know you've done it many times, so
Yeah.
taking a page from your book. I'm in Delaware right now, enjoying air conditioning while my kids are at the beach. I went to go turn the water off in the garden, and there's a lot of bugs out. So I'm going to stay inside for probably most of the rest of this trip just because I get more done. But how's things out in California where you're at?
It's a great, like summer's here, the humidity level's just right.
Yeah,
There's no bugs.
yeah.
My youngest is on her last day of school, so our family tradition is we go to the fair on the last night of school. My wife happily stays home from that venture, and the kids and I eat, and just something we've done for a very long time from when they're little guys, and uh, probably won't have too many more of these types of things. So I get all sentimental. I quite enjoy it, probably more than the kids do. So
Oh, that's cool. Well, yeah, that's a great tradition. We haven't quite established those in our house yet, but we'll get there soon. So
yeah,
very fun. Well, I'm gonna hope that the air conditioning doesn't come on and disrupt the audio. We'll see how it goes. I've moved positions a few times here, but today's topic. So, like I kind of shared before the show, I don't follow politics too much until I need to, right? So, comes to voting time, I typically will do my research, kind of understand who's who and who I want to put a checkbox next to. But in terms of, looking at everybody that's on the playing field right now for the California Insurance Commissioner, I'm not as familiar. So today we wanted to take a moment because this is going to be so impactful, I think, on the California insurance market. It will impact it on both the commercial and the personal sides. Maybe personal more than commercial, we'll see. But for example, I mean, California Fair Plan has already approved a 30% rate increase for October 2026. So that's definitely in the sights. I know people are talking about that on socials. Maybe it's not coming up very frequently on elsewhere yet, but realistically, that's kind of where we're at. So I'm gonna let you take it from here and just talk through who are the two final contestants here for the insurance commissioner in 26.
yeah, awesome. Well, thanks, Peter. And you're absolutely right. Politics in large, it struggles to get people's or keep people's attention, and for all the obvious reasons we don't need to necessarily go into. But at the same time, there's a saying all politics are local, meaning that what goes on in the national stage. I agree that it can be a little disconcerting to feel like you don't necessarily have a say in what goes on the national stage, but you certainly should be aware of what goes on in your local and your communities, because that does have a big influence on it. And there's a lot of good people out there that are struggling to get their voice heard. So it's a good to give them their due for those that have raised their hand and are, in my opinion, given one of the ultimate servant leader community service activities, which is running for a political spot. And then uniquely in California is the insurance commissioner office. So what you bring up a good point that not a lot of people follow this, and not a lot of people in that just kind of goes with insurance in general. And I don't know if it's the industry at large or if it's the thought that you buy something that you hopefully never ever use. And then when you do have reason to use it, like that's when you find out all the details of it. Which, I mean, that's really, if you think about it, no company would design a product that way from the get-go, because it's just ripe for disappointment if someone doesn't take the time to understand it, or if, in the game of telephone, if things weren't explained to them correctly, or if the company, is a bad actor, and that's quite rare. Insurance companies don't go out to harm people and don't go out to treat people unfairly. But at the same time, it's a contract. And if you don't read the contract well, then there's going to be surprises on stuff. So again, that's not exciting topics for anyone. No, nothing that anyone would willingly engage in. So as a result, people tend to just not think about insurance, kind of tuck it in that side of your brain that, oh man, I don't want to think about this. I just want to find someone that tells me what I need to do and it's done, which is by and large how we work with a lot of our clients, earn their trust and then guide them on what they need to do. And then when it comes down to an election on insurance, it's like a double whammy of, man, talk about two things that the majority of people wouldn't want to get involved in are politics and then politics related to insurance. But in the state of California, as almost every consumer is aware, like we have had a very bad insurance situation, specifically as it relates to personal home insurance. So home insurance. So commercial insurance hasn't been affected by this. Auto insurance hasn't been affected by this. But certainly, home insurance is where we've had this battle between an insurance commissioner, a Department of Insurance, and insurance companies. And who's been caught in this battle? It's the consumers. And it's meaning it's the person who opens up their mail and finds out that their policy that they've had for 20 years is being non renewed. It's the person who opens up their mail over a course of 4 years and finds that their premiums have tripled or quadrupled in that 4 year period, even though they haven't made any claims. Or it's the person again opening up and seeing that their deductible have risen astronomically as it relates to like fire losses, or they get the boilerplate legal language that explains or tries to explain in a very consumer unfriendly way how coverage is being pulled back or restricted. So those are the people that have been impacted in this battle that's been going on between Department of Insurance on one side and then the home insurance carriers over it. And so with all that said, that's why people should be paying attention to who they elect as insurance commissioner, because it what we've done in the past is, again, you can see where we're at right now. And again, that is purely because of this battle between those two groups. And so I'll pause there for a second. Any thoughts, questions, anything related to that? Otherwise, I'll keep going.
I mean, so when I started at Falcon West, I started a newsletter maybe 3 years ago. I think the website's still up. I haven't published on it in a while, but it's insurancemarketupdate.com. And my whole intent there was kind of to do a deep dive into what carriers were writing and which carriers weren't. And this is when, Allstate pulled out of the market, then State Farm, then Farmers. We had just these mass exodus. And so I did kind of a deep dive into our current insurance commissioner, who is, what's his first name? Ricardo Laura, right? So
Carl.
yeah, yeah. So he's our current insurance commissioner. He'll be moving on, but the whole narrative around what he was, around the people that were at the time who I was reading were saying how he was kind of between a rock and a hard place, right? He's contending with all these fires on one side that, and then on the other side is like everyone's trying to make it look like the carriers are strangling him and making it difficult. So, I mean, just to kind of I guess put it out there, the person inheriting this job has their work cut out for them. This is not going to be an easy, like, oh my goodness, we suddenly turn the lights on and everything's better again. There's still a lot of things that have to be worked through. And maybe later on we could touch on like the things that need to be done. But
Yeah.
from my experience and having read and looked at this stuff, it was been a couple months since I've done it, but it'd be very interesting to hear about that part too.
Yeah. And so you touch on the point. So it was the decisions of the insurance Department of Insurance that got us to this position. So again, recall, like this isn't all insurance. You can still insure commercial property, and we have clients that insure very large commercial properties that are right next to homes where you can't buy insurance on the home that's worth 10%, but you can get multiple carriers that are insuring that big building right next to it. So again, to be clear, it was
Yeah.
decisions by the Department of Insurance. And what were those decisions? So they put in some very customer friendly provisions. And again, someone listening to this be like, well, what's wrong with doing something that's customer friendly? Nothing at all. But when it comes at the detriment of the company that is offering that coverage, and when it's dictated that here's what you must do and here's what you can't do, eventually that company is going to come to a point and be like, okay, if those are the rules, again, I don't make the rules, you make the rules. But if those are the rules, I can no longer offer my product for sale in your state. And that's 100% what happened in this situation. So it wasn't, and there's things, yes, wildfires. 8 of the largest wildfires in California history occurred in the last 9 years. So again, that's a fact. Like those are things that happen. So what will that do is that gets insurance to be more expensive. And what the Department of Insurance said was, no, you can't raise your rates more than, and they picked the amount of 6.9. If you want to raise your rates more than 6.9%, then you have to give us, you have to do it basically a rate filing request. In normal times, that's a 90-day approval process. In every other state, it takes 30 to 90 days to do so. The Department of Insurance in the state of California basically slow walk those, and it would take 2-3 years to get an approval like that if you got, and oftentimes it was just a denial on that. So that was kind of step one. And again, that's the Department of Insurance saying, here are the rules. This is what we're going to allow you to charge for your product. And eventually insurance companies saying, can't play by those rules. We're leaving. And there are a couple other things that they did as well, like not allowing to use the cost of reinsurance is something. So insurance companies buy insurance that's called reinsurance. And when that becomes expensive and it's effectively their cost of goods sold, if you have to buy something and you're only allowed to charge an X number price for that product and what your materials are costs more, guess what? You're not going to stop selling that product because you're losing money on that. So insurance companies, and there were a couple other factors as well that came into play, which is not the point of this podcast, but those rules that were set for insurance companies by the Department of Insurance was what caused these companies to say, you know what, we're leaving. So the good news is that the Department of Insurance has rolled back those most stringent ones, and they've opened up the playing field. So now it's a matter of letting the market happen to hopefully ease the crisis. So again, I'll pause for a
Yeah.
second there.
No, it's good. I mean, we are starting to see carriers come back, right? So as you know, I'm
So
copied on all the personal lines communications we have. Pure's coming back. It's great to see all these companies that are coming back in to have conversations or even offer quotes again, like Travelers. I mean, finally, it's like so good to see Travelers quoting some business for us again because they're like, okay, we're back in the market. We'd like to participate. So all really great things to see, and I think positive for consumers.
yep, perfect. Agreed. And those changes that the Department of Insurance enacted, and this was back in 2000, January in 2025 was when they started to allow these changes. So now we're 18 months past that where we're starting to see a softening of things going on, which again is very welcome to see. So that brings us now to this election. They had the primary last week. A bunch of people were running in the primary, kind of threw their hat in the ring. And the way how California voting works is the top two vote getters, regardless of political party, advance then to the fall election. So in the two that won, one is a former San Francisco supervisor. Her name's Jane Kim. And then there's a state senator named Ben Allen, were the two leading vote getters on that. They have somewhat similar positions on it, but there's certain things that have been proposed. And again, we all know that what a politician says before they get elected doesn't necessarily match up with what a person's going to do. But there are some very concerning things that Jane Kim, in particular, is advocating for or running on the platform of that. If we saw that, like it would be worse than what things were a few years back. It would be more than a setback. It would be more than kind of knocking it back status quo. It's actually taking steps backward to make us in an even worse insurance market 3-4 years down the road. If you look at the key positions that Jane Kim has outlined or running for, and just from a real high level, is she wants to get more into the public model, meaning that the government would become the preferred insurer, and for certain things like for wildfires. So a single payer plan. And again, to me, that is an absolute disastrous suggestion on stuff to expect one that the state can operate nimbly. And we have something here in the state called the Fair Plan, and that's a quasi-public. It's run by the state, but it's paid for by insurance companies who write in the state, who are then allowed to assess all the policyholders that they have in the state. So it's effectively funded by taxpayers, and it's not actuarially sound, meaning that you mentioned like there's a 30% increase that they're doing. It was never designed to be the preferred insurer. And what they found out was that when people started pulling out of the marketplace, that it became not only the preferred insurer, but the only insurer, and grew way more than it was ever intended to grow, and got severely tested, as we saw during the LA wildfires. By law, that insurer, it can't go bankrupt because, again, it's funded by, so if it doesn't have enough money, which it purposely doesn't, that comes through assessments on the insurance companies, who in turn assess their existing policyholders to do it. So moving to an even bigger Fair Plan, in my mind, is an absolute disaster. And again, a single policy plan, because what if you don't need to use it? Like, what if you have an insurance company that you're grandfathered in on, and you've had a good relationship, and all of a sudden you have to go to a plan because it's just again, there's so many levels of disaster, no pun intended, written or that would come with a plan like that. That again, I hope that it's just something she's using as a soundbite to get elected, and then we'll once she gets to look under the hood and see what's actually going on. But to me, it's a very uneducated, ill-advised, just frankly, terrible idea. In other things that she's running on, and again, this to me is just separated from reality because she's saying that auto insurers are making a lot of money in this state. And if they want to write auto insurance, they have to write home insurance. Guess what's going to happen in that scenario? They're going to stop writing auto insurance, right? If you tell me I have to sell something that I can't make money on in order to continue selling something that I'm not even really making money on right now, I think the auto combined ratio is $1.09, meaning for every dollar they take in premiums, they're paying $1.09 out on claims. We're just going to see the auto insurance shrink up faster than the home insurance market did. So again, terrible idea number two. That right now, for the very lowest of basic, you can actually get a program through the state for auto insurance, and this is if you're just basically it's a subsidized program that very few people take up on because it's again terrible coverage. She wants to expand that to offer that for all. Again, a terrible, terrible idea. The thought of having the state, handle a claim from, any of our clients that just, again, in my opinion, terrible idea. And then things like she's advocating aggressive consumer protection. And again, that's great. You need to fight for consumers, but you also need to set rules that have acceptable rules so that you can invite enough people to compete in the marketplace from the private companies. And if they don't abide by those rules, certainly enforce that, but don't make it a punitive approach to even write business in the state as a get-go, because guess what? Otherwise, we're going to be in an even worse situation than we were over the last few years on home insurance when you can't buy auto insurance. Or it's just, again, each of her ideas to me are all really non-starters and again, not very well thought out that would just absolutely collide in the marketplace. So, but guess what? She won 27% of the vote with her nearest challenger being 20% of the vote. So to me, this is something people need to pay attention to because if a person like that's elected and, doesn't come back to reality on some of our ideas and goes ahead with these types of things, I mean, absolute disaster for our state's insurance situation. So,
Mm-hmm.
so
Yeah.
any questions at all on Jane Kim?
No, not at all. I mean, that I was just going to note that she did win 27% of the primary, so we'll see how
Yeah.
that
Exactly.
goes.
7% more than anyone else. So, and the other person who advanced, Ben Allen. So, state senator, obviously he's familiar with how California politics work. So he has some ideas that I think are more viable on stuff. I don't think they're necessarily great ideas, and I think he's missing a lot of things that I'll share in just a few minutes. But he talks about things that, hey, how can we address lowering the physical risk of properties? And through that is through changing building codes. And we saw things like this employed very successfully in Florida after Hurricane Andrew went through in 1992 and wiped out Miami or a good portion of Miami, which at the time I think was the most catastrophic dollars paid disaster since been surpassed. But after that, there was a change in building codes, and buildings were required to be more hurricane resistant. So what that is talking about is let's upgrade our building codes. And again, that makes sense to me. That's a possible thing. Interestingly enough, it gets fought back by like the groups, like the realtors group, because when you increase codes, it adds cost to things. No one necessarily likes to add cost, but again, to me, that preventative cost up front saves in the long term on insurance premiums, on rebuilding, on all these types of things. So I like Ben's idea of, hey, how can we phase things in so that we're not, just making this hard line. And again, to me, it's a reasonable idea of how can we invest to minimize our risks going forward on it. And he talks about doing loans and stuff like so. There's a lot of details to get figured out, but I give him a solid B for, hey, that's a pretty good idea. He talks about land use restrictions, so not building in certain areas. Again, I think that's an okay idea, but just this week in San Diego, there was 2 fires that happened that were a mile and a half from the coast in urban areas. So these fires can erupt. It's weather condition driven. When you have hurricane force winds and a fire that starts and no humidity on a super dry day, like that fire is going to go where that fire wants to go. So, I agree, like you shouldn't build in the middle of a forest, but there's things that will make that already costly now. So I don't necessarily know that we need to further restrict where we build. I think we need to be smarter on how we build in those existing areas rather than drive up the cost of land by restricting where building can happen. So his other provisions that he talks about here that penalizing insurance companies, all those things again are good. We already have rules that do all that now, so I just think they need to be evenly enforced on stuff. And again, he calls it stricter corporate responsibility. The corporate, I mean, again, if there are bad actors, go after them. We have laws that already allow that. I don't think you need to necessarily make things more stringent, but certainly I support going after any bad actors, whether it's on the consumer side or on the company side. And he talks also about enhancing policyholder rights. So again, all things that to me they're pretty minor levers on stuff. So again, I think if you look at between those two candidates, Ben Allen's provision are more feasible and more rooted in how can we get this market functioning faster. So certainly, if I had to choose between the two of them, based upon what we know now, Ben Allen would be my choice. So I will add, though, I'll pause there because I also have some things on what I think they're missing that if either of them are listening to this podcast, hopefully they'll adopt.
Yeah, my one comment with Ben Allen is, so if you look at one of the things he's proposed, which is, holding fossil fuel companies accountable. And I mean, the hat I'm wearing right now, local energy, right? So we talk with a lot of oil and gas companies. And it's interesting because, that's one of his premises is to, I don't know how he plans to lever that, but, make sure that oil and gas companies are participating because of climate change, which is driving but what's interesting to me there is that we haven't permitted anything in California on the oil and gas side. When I'm saying nothing, I mean talking like a handful of drilling permits. It's been very low, so I'm curious personally to see how that would shake out because we started to see increased drilling activity in California, which I feel like there's it's no coincidence. Is kind of what I'm getting after. So, anyways, that's all I have on Ben Allen. Is I'm curious to see how that shakes out.
Yeah, that you bring up a very good point of if I feel a lot of what California politics in general has done is how can we almost blackmail companies that operate here and say, hey, if you want access to the fifth largest economy in the world, then here's our rules. And I mean, again, that's what we saw with insurance, and insurance companies played along with that until it became unfeasible. So my fear when the politicians' stance is, hey, let's make this as tough as possible, like eventually you hit a breaking point, and we 100% saw that with what happened with homeowners insurance over the last few years. Is Department of Insurance said, here's our rules, and companies said we can't operate on that. We're going to leave, and then
Yeah.
crisis. All right. As it relates to fuels, certainly our refining standards. And again, I'm all for the environment. I like, green trees and 100% like the environment. But when we're doing things that, the energy companies, the refiners, that are choosing to shut down and just say, we can't operate in this state on it. And so we leave. And, what happens then is, we're paying $7 a gallon for gas right now with the rest of the country. It used to be a 25 to 50 cent delta on things. And now it's $3.50 delta on the average price of gas between on it. So again, my hope with any of our elected officials, again, I appreciate them running. I appreciate them volunteering to serve the community, but it's just do stuff that will invite others to be here rather than be punitive against those. Because eventually people will be like, you know what, I'm out. And I felt like in a lot of ways we've hit that. So to keep this more insurance focused, I do have some ideas on, hey, if I was insurance commissioner, which thankfully I'm not, this is what I would be doing to get our marketplace functioning in a more normal manner so that people can have options like they do in other states. So first off is just faster rate reviews and better efficiency in the Department of Insurance. And that holds true for every company. Something that we work constantly on is how can we be more efficient at what we're doing and provide a higher level of service? But the way how it's operated and it's very adversarial with industry stance over the last few years just cannot happen. That's not serving the consumer, which is what both parties are looking to do. So you have a mutual client here. Let's work on a system that allows industry and the department to work together to best serve those companies and not make it adversarial between it. I do like the idea of increasing building codes and making properties more fire resistant. I think that's a great thing to embrace. And that will mean that, we can't have realtor groups or building groups oppose it because it's going to drive up cost. They have to recognize that, yes, it may drive up cost, but in the long run, that's good for everyone on it. It has to get done. Thoughtful planning on where new housing goes and where we're allowed to have housing. Politicians constantly lament the shortage of available land. It's not a shortage of land, it's a shortage of available land, but we got to make land more available. We got to ease that permitting process. It shouldn't take as long as it takes people to build housing in our state. And that directly impacts costs in California, and directly drives up insurance premiums because things are more costly here. A big thing that no one is mentioning that is again probably why I would never get elected to an office is tort reform. So we can't continue to operate in this litigious society where everything, you know, every wildfire is a instant class action lawsuit against either the utilities, the insurance companies, whomever. Every auto accident is viewed as a lottery ticket. Every slip and fall is viewed as a lottery ticket. If we enacted tort reform, that would go so far into lowering people's costs because there's no, magic bucket out there that pays these types of claims. It's paid by every single person who has an insurance policy. When you have these types of legal environment that allows these types of claims going on. And that, again, directly impacts your home insurance costs, directly impacts your auto insurance costs, and every insurance policy you have to some degree with that. The FAIR Plan, you mentioned that 30% increase. It's not enough. The FAIR Plan has to be actuarial sound. And other states have seen the same problem when their pool of last resort becomes the only pool, that it gets flooded with policies. So there has to be efforts to depopulate the FAIR Plan. And to do so, that means that they need to charge more money so that it's actuarially sound on stuff, and it's not just a price they pick from somewhere. Because keep in mind, the FAIR Plan is not good coverage. There's no liability coverage. It's very limited. It's effectively a piece of paper you're buying that will satisfy your lender, but it's not going to make you whole in the event of a loss on it. You want to make sure that the carriers that are allowed to do business in the state, and I would lump the FAIR Plan in this as well, have the infrastructure so that you're not just again selling that piece of paper and collecting premiums, investing in premiums on it. It's, hey, if we have thousands of policyholders who have claims, like we see with these wildfires, like there has to be a plan in place that's been tested, that's been vetted. This is where the Department of Insurance could do a great job, is help insurance companies recognize that, hey, you're going to get 50,000 phone calls the next day after one of these events. How are you going to handle that? Show us where your systems, show us where you can bring in people from other teams. Show us how you're going to, and through that whole process of A to Z of taking the claim calls, adjusting the claims, paying out the claims. Like if that process hasn't been vetted and tested, then we're going to have insurance companies, these opportunistic companies come in and be like, hey, I'm great. I'm saving people all these money, until there's a big wildfire. And now all of a sudden you have thousands of really unhappy customers on it. So that's something that, again, people aren't talking about, but the Department of Insurance needs to be doing that. And then really, at the end of the day, is just working with industry to come to the table. And again, get this, we're both serving the same person. We both want happy customers on this, whether I'm the Department of Insurance, whether I'm an insurance company. How can we create a framework that works for both? In any negotiation, each side won't get everything they want, but what's an agreed upon process or framework that we both can operate in this? And again, my fear, if Jane Kim is elected and keeps these same tenets that she's advocating, that's not good at all from consumers. Again, Ben Allen's suggestion is a bit more pragmatic. And I'm hopeful that, if whoever is finally elected will work with insurance companies to get a functioning marketplace. And that at the end of the day is serving the consumer who's right now caught in the middle.
Yeah, it's gonna be an interesting thing to watch. That's probably the only election I'm watching because at this point, I don't know, it's the most interesting one to me at least. But there's more obviously that's on the line. As brokers, do we have are there groups that have an influence on this process? I'm not saying on the election process, but on the on those larger discussions, or is it just the carriers, or is there any involvement with people that are helping place the coverage?
Yeah, so there's massive involvement with industry trade groups. So like the IIAB is obviously advocating policy issue. The insurance companies will have their lobbyists that they will influence, and then the groups that are served by it. So the builders, the realtors, they're all going to be lobbying as well and trying to get their side. again, I think a problem with our politics is sometimes those that can offer certain things in return get there. And I mean, that's been the way of our country and really any functioning government of, hey, you give me this, I'll give you that. And again, I would hope that in this type of situation, and again, why I'm probably not in politics is it's a bit of a naive hope that you can be like, hey, at the end of the day, here's our consumer. Some of my constituents, some of my backers may not like all these things that we're doing, but we're going to make choices. And then the problem is, if someone runs with that platform, they're not going to be elected because all these other groups that are more organized, more powerful, can organize, can have more money, would make sure that this person that it would allegedly harm them is not going to get elected. And again, a little bit of a cynical view on politics, but that to me is where, let, if you're, what can I do? You can reach out to these candidates. You can offer your suggestions. You can tell them on things that you don't like. Ultimately make sure you get out and vote and cast your votes. These are the two people that are running. So I'm going to watch it closely. And if, they either hold their guns on something or take a more radical turn, we didn't talk about the person that I was in favor of for, Stacey Korsgaarden, who is an insurance agent and an agency owner, who I thought brought the most practical things that would help the consumer to the table. She unfortunately didn't have any political experience. This is her first time running for office. She did finish within, I think, 1 percentage point. I think she was it's 19%. So she was very, very close.
Mhm.
Obviously, the odds get harder against her if she becomes a write-in candidate, but it wouldn't shock me if she's, and I have no idea, I have no relationship with her or never talked with her, if she's going to try and stay in the race or not. It's certainly an uphill battle, but if people start looking at this closer and if the views don't become more consumer friendly and less kind of soundbite friendly, then I think there is a scenario where someone like a Stacey Korsgaarden could get ridden in if enough groups rally behind her. Uh,
Yeah. With Stacey's Coors Garden, so I was there's a Coors Garden Insights, which is a insurance. I was wondering if she was affiliated. I couldn't find any relation between the two, but basically it's like an insurance advisory company that, but they had the same last name. And Coors Garden's not like the most popular, it's not the most obvious last name for people to have. So,
yeah.
anyways, all right. Well, I think that's all we have time for today and going through all this. So, Mike, thank you for sharing your insights into the two we got running. Yeah, and just I really appreciate learning and hopefully some of your ideas that you're sharing here actually come true. That'd be great.
Yeah, and I'd love to hear if anyone else listening has other ideas on how they think things work or how they can
Yeah.
get involved. Certainly the beauty is that every vote counts. So if you do have an opinion or an idea, I'd say share it with both these candidates. And again, make sure you get out and vote.
All right. Guys, have a great afternoon. Thank you for listening, and we'll see you again next week.
Thanks, Peter.